Hello, I'm Sonia with the Motley Fool and I'm joined by David Kuo, and we're here today to talk about 5 shares for a beginner's portfolio. Now, David, you're an income investor, which essentially means you're seeking a dividend from the shares of the companies that you're invested in. Can you explain to us why dividends are important?
Well, because I think that investors should be rewarded for holding and buying shares, and paying out dividends to investors is a good way of doing so. But if you are starting out buying a portfolio of shares, yes, focus on dividends, but focus on 2 other things as well. One of them is to make sure that your portfolio has sector diversification. In other words, you want to buy shares in different industries that are completely unrelated to each other. Another thing to look for is, of course, the companies that you buy the shares in sells its products and services around the world, and that will give you that geographic diversification. And I think you don't need to look much further than the FTSE 100 to actually fulfill those 3 criteria.
So what companies do you like for a beginner's portfolio?
Well, one company that's in the FTSE 100 is Sabmiller. This is an international brewer. It makes beer which it then sells across the world. It sells it in North and South America, in Europe, in Africa, and also in Asia. So that is that geographic diversification I was talking about.
So is there anything that you like in the pharmaceutical sector?
Yes, there is. And again, in the FTSE 100, we have Glaxosmithkline. Now, this is a company that sells its products and services around the world. And the beauty about Glaxosmithkline is, yes, over the last few years, it hasn't been doing particularly well. But what it said recently was it has around 15 new products in development, which it hopes to get approval from the regulator. When that comes through, then I think Glaxosmithkline will be able to demonstrate top-line sales growth and also bottom-line profits growth.
Speaking of growth, our next company is British American Tobacco. David, you've described this one as an accidental growth company. Why is that?
Well, because I don't think British American Tobacco set out deliberately to try and grow sales. It just happens to have the product, cigarettes, which is in demand around the world. And as the population grows, then so too does British American Tobacco's products. Now, the interesting thing about BAT is that it doesn't need to spend an awful lot of money on research and development. We all know what a cigarette looks like and how it is actually made. So consequently, as the top line sales grow, then so too does the bottom line profit. Now, it doesn't need that money, so therefore it spits that money out in the form of dividends to shareholders. And so as a result of that also, as the dividend starts to grow, the share price grows also. And that is why I call it an accidental growth company.
Okay, so what do you like about consumer giant Unilever?
Well, Unilever is definitely a consumer giant, and you really don't need to look any further than your kitchen sink, your bathroom cabinet, your fridge freezer, or your pantry in order to find Unilever's products. Now, the beauty about Unilever is that it relies on repeat purchases. So anyone who has used, say, Dove deodorant, the moment that deodorant is finished, you have to go out and buy another one. And that is really the secret behind Unilever's success over the years.
Yes, it sells 5 billion products a day.
Yeah, you see, that really doesn't surprise me at all, because it is a phenomenal marketing organization, a phenomenal marketing machine. And what it really sort of gets you to do is to try the product, like it, and go back and repeat purchase.
Okay, so your final share, David, can you tell us what you like about this telecoms company?
Well, this telecoms company is Vodafone, another FTSE 100 company. And most of us will know that we cannot do without our mobile phones, which is why I like Vodafone. Currently, its share price is a little on the depressed side. Its dividend is still very strong, so consequently, its yield is very attractive, over 5%, which is why I like Vodafone.
Okay, there you have it. That's 5 shares for a beginner's portfolio. They are all diversified in terms of sectors and exposure to overseas markets, and they pay a dividend of around 4%. Just to recap, they are Sabmiller, which is ticker code SAB, Glaxosmithkline, which is ticker code GSK, British American Tobacco, which is BATS, Unilever, ULVR, and finally Vodafone, which is ticker code VOD.